Welcome to Framework Fortune. I'm your host Ben, and it's time for another one of Ben's stock reviews. And today we're going to take a look at Canopy Growth. This is ticker symbol CGC, and this is a pot related company. This is one of the big Canadian players. There's been a lot of talk about them here lately because they didn't quite hit their earnings, and we'll check that out once we dive into it. But let's go ahead and throw it into Thinkorswim, Yahoo Finance, and check out the website, see what it's all about. And remember, if you want a stock review, leave it in the comments below and I'll do a review about them. So let's dive in. Okay, so we're in Yahoo Finance. You can see here CGC, it's trading around $16.87 a share. Let's take a look at these statistics and see what it's all about. 52-week low of $9, 52-week high of $44. See, negative 7.5% return on assets. Negative 51% return on equity, $218 million in float. Got a little bit of insiders, a little bit of institutions holding it. Quarterly revenue growth, 228%. I do like that number. Gross profit, $105 million. See, nothing really on their balance sheet other than a total debt to equity. So we're going to have to dig into their website to find out a little bit more. So let's go ahead and hop over to the website and see if we can find those numbers. Okay, so here's the website. You can see, not too bad. Pretty good looking website. Got Facebook, Twitter, LinkedIn up here. Canopy acreage deal. We'll check into that in just a little bit. All right, so here's the about page. You can see their vision is to be the #1 cannabis company in the world. It's a pretty big goal, but I like it. Aim for the stars. See their story. In April 2014, Canopy Growth became the first cannabis company in North America to be publicly traded. We followed with being the first to complete a bought deal to diversify our platform to include both greenhouse and indoor growing to acquire a major competitor and to be listed on the Toronto Stock Exchange. Continuing those first, we remain the only cannabis company to be a member of a major global stock market index. In the case of the S&P, so a lot of firsts. Of course, this is a new industry, so somebody had to be the first. But like I say all the time, just because you're the first doesn't mean you're the best. You can claim to be first, but the first idea is not always the best idea. So, I like the positivity that they're talking, but being first doesn't really mean anything. So here's the Tweed Visitor Center. Stop in and say hi. We got Spectrum Therapeutics online store, customer care center, craft grow collection, Canopy Rivers, Body Stream, medical marijuana services, Apollo Applied Research. So several subsidiaries. Canopy Growth looks like they got a lot going on. Let's check out the brands. We got the Tweed, Spectrum Therapeutics. Looks like DNA Genetics. DNA Genetics have won awards in every category in the Cannabis Cup, the world's preeminent cannabis competition. DNA has partnered with us to ensure that all knowledge and experience is put to good use. So they're working with DNA to breed new strands. I like that. Tokyo Smoke, award-winning design-focused company that seamlessly blends the best of cannabis with preeminent retail. Okay, Doja, they proudly grow premium handcrafted flower. Vanderpop, most recognized female-focused cannabis businesses. Okay, that's cool. And then we got Maitri. I don't know if I'm saying that right. Maitri or Maitri, I'm not sure. But recently nominated Brand of the Year at the Canadian Cannabis Awards. Canopy Innovation Lab. Stores and Bickle are designers and manufacturers of the only medically approved vaporizers in the world. Most notably the Volcano Medic and the Mighty Medic. EBBU. By applying EBBU's IP, the company has the potential to vastly reduce the cost of CBD production. Okay. Battelle and Canopy Growth work together to advance knowledge surrounding cannabis in support of medical research and novel product development. There's the Apollo Scientists Pharma, developing and commercializing pharmaceutical grade cannabinoid derivative products. So here we are on the products page. We're going to look at a couple of these products. They got the edibles, line of high quality edible cannabis products. Okay. Beverages, vapes, dried flower, oils and concentrates, soft gel capsules. Now, I kind of like the idea of soft gel capsules. The general perspective of the public on cannabis is you're doing something wrong because it has been illegal for so long and it's still not even federally legal in the US. So a lot of people, especially some older people who could really probably use the benefits of medical marijuana, are too afraid to dive into it. So you give them a soft gel capsule that could actually make sense to them, like, oh, this is just a medicine. This is not some weed or drug or something like that. So here's the international footprint of Canopy Growth. And as you can see, we got several in Canada, a bunch in the US, got some in South America, and a bunch over here in Europe, even one over in Australia. So they are definitely a global company. Now let's get into the investor page and let's look at some real statistics, some real numbers, and see what they're really about. Because all the flash and the nice pictures and marketing that they've done on the rest of this website, it looks great, looks like an awesome investment, but that doesn't mean anything really. So we got to look a little deeper. So this is their consolidated financial statements on March 31st, 2020, and this is in Canadian dollars. So from 2019 to 2020, we've got a decrease in cash and cash equivalents. We had 1.3 million posted in 2020, and they had 2.5 million just about in 2019. Short-term investments, only 673,000 right now. In 2019, almost 2 million. So they got more inventory now than they had in 2019. It's not much more, but that could be because they're not selling as much. So that doesn't really tell us anything. Total current assets, they had more assets in 2019 than 2020. And you can see total assets, same thing, more in 2019 than 2020. And of course, we got to keep in mind that the virus happened and Canada was shut down as well. So maybe they downsized some investments. Maybe that's what it could be. Not sure. Let's see what their liabilities look like. Total liabilities, 1.6 million versus 1.49 million. So they got more liabilities now with less cash. Total shareholders' equity, they've got less than they had in 2019. So 2019 base revenue 253, and then this year 439. So they have increased revenue. Have increased net revenue. Let's see the cost of goods sold. Now they increased revenue, but their cost of goods doubled from 2019. Their revenue didn't quite double. It almost doubled, about 60,000 off from doubling. But their cost doubled. Actually, a little over doubled. And you see, in 2019, their operating expenses were in the positive. 2020, they're negative 31,000. So total operating expenses, you can see $1 million more in operating expenses in 2020 than 2019. See loss before income taxes, net loss, bigger loss in 2020 than 2019. I'm seeing a company that is growing, but they're spending more money than they should be, and they're taking more losses than they should be. And I'm just curious, I don't know how much of this could have really been from COVID in March. I don't know. Anything in parentheses is negative, so there's a lot of parentheses in all this. And of course, I'm just doing a very quick overview of the stock. You want to really look and pay attention close to all these numbers. But seeing all these negatives usually is not really a good thing. They invested way less cash in 2020. In 2019, they invested almost over $3 million. And then this year, they've only invested, it's still early in the year, too. We got to keep that in mind. So I don't know how much is related to COVID. And I don't really know if I want to use it as an excuse, because if we look at the Canopy Growth competition, their competition is Aphria and Aurora. Aphria did better on earnings this year, and Canopy Growth has done worse with their earnings. So let's just throw it in Thinkorswim, take a look. We're in Thinkorswim, we've got the chart pulled up for Canopy Growth, max chart as far as we can go back, and then, you know, they started in business around 2014, it looks like. Rode around $1 for a while, and had this big nice run with all the other pot stocks. Of course, now it's been coming back down, starting to level off a little bit, find some areas of support maybe in this $15 area, but still we are on a downtrend. So the company is still bearish, it looks like. Let's look at the 1 year. So you can see here's the 1 year. The stock was $44 last year in June, now it's $16. COVID happened right around here. Didn't really drop off too hard until about end of February, March, and then it had a pretty low drop, and it's kind of been rebounding since. So, you know, that's pretty decent. The low it's gotten is $9, so that's pretty low for this stock, I would say, for now. See, since August, pretty consistent volume, although volume's been dying down a little bit as it's been dropping, but that's with most pot companies. So let's check out some of these news headlines here. Canopy Growth is growing more pot than it can sell. Okay, see, that's what I thought. They're showing a big loss and they had more inventory than they did last year. They must not be selling as much cannabis, so I don't like that. Got a commercial sales agreement, it looks like. Tetra Biopharma and stores in Bickle. Canopy Growth stock price target cut to 19 from 21. Oh yeah, here's that acreage agreement I didn't read on the website, but let's read what it says. It's entered into 2 funding agreements to raise up to $60 million. The first is a standby equity distribution agreement with an unnamed institutional investor for up to $60 million of its Class A subordinate voting shares, and the second is a private placement in which it issued $11 million in principal amount under a secured convertible debenture for gross proceeds of $10 million. Proceeds of both deals will be used for general corporate purposes and working capital. New York City-based Acreage has an option agreement with Canadian cannabis market leader Canopy Growth, under which Canopy will take over the company as soon as the federal ban on cannabis has been lifted. So, it looks like Canopy Growth is trying to buy another company, trying to buy a U.S. company. It's pretty interesting. Makes me wonder, and this is just speculation and conspiracy theory, but makes me wonder if they know something about maybe U.S. is going to lift the federal bans, then make it federally legal finally. Like, why would they be buying into a company if they didn't think that was coming soon? I don't know, just saying. That's just, you know, a little bit of speculation there for you, but maybe they know something that we don't. But yeah, overall, after taking a look at some of the numbers, I'm not sure if I would want to invest in this company right now or not. Me personally, I'd probably want to see the Q2 earnings, because those second quarter earnings might give us a little bit better of a picture of what's going on. It seems like they've cut a lot of investments and some assets, and they're writing off a lot of losses. They're growing more than they need to sell, so they're stocking up on their inventory. But the thing is, cannabis, it can only hold so long in dry storage or any type of storage, so you can't be growing too much. It's something that you have to have under control as a company like this. So I don't know, unless they come up with some way to store it where it lasts forever, you know, they need to figure out something. There's definitely something going on with this company. So overall, it's not a bad stock, but it's also not a great stock. There's definitely going to be some better investment opportunities right now out there other than Canopy Growth. It's a stock I would keep on watch, you know, see if it gets out of the downtrend, see if Q2 looks a lot better, maybe even Q3 looks a lot better. Keep up with their assets, what they're investing in. A lot of questions that still need to be answered. That would take a lot more research of diving into this company to find out those answers. But that's it for this video. If you enjoyed it, hit that like button. And if you want to see another video about cannabis company, check out Planet 13.